This video covers Hitachi's full-year financial results for fiscal year 2024, from April 2024 to March 2025, and outlook for fiscal year 2025. Hitachi is a large Japanese multinational company, which operates in various sectors, including information technology, energy systems, industrial equipment, and infrastructure. Originally known for electrical products, Hitachi has transformed into a global technology and engineering group focusing on digital solutions and social innovation businesses. After the Lehman shock in 2008, Hitachi suffered huge losses, with its net loss reaching over 700 billion yen, the largest ever for a Japanese manufacturer at that time. The company faced an urgent need to restructure. It carried out large-scale reforms, including reducing its workforce, selling off non-core businesses such as its hard disk drive division, and reorganizing its group companies to improve efficiency. Hitachi then shifted its focus from consumer electronics, which were becoming less profitable, to social infrastructure and B2B businesses such as railway systems, power grids, and IT services. It also expanded its global operations through acquisitions, like buying ABB's power grid business, to strengthen its position as a global infrastructure and solutions company. These reforms helped Hitachi recover its profitability and transform its business structure into a more stable and growth-oriented model. Hitachi's new major business segments are Digital Systems and Services segment, Energy segment, Mobility segment, and Connective Industries segment. Digital Systems and Services segment provides a wide range of IT solutions, including system integration, cloud services, and digital transformation support. For industries such as finance, public sectors, and manufacturing, helping customers improve operational efficiency and create new business value. Energy segment focuses on power systems and grids, providing equipment and solutions for electricity generation, transmission, and distribution, including renewable energy. Mobility segment mainly covers railway systems, producing trains and rail infrastructure, and offering maintenance and digital mobility solutions. With strong operations in Japan and overseas markets like Europe and the UK. Connective Industries segment offers industrial products such as elevators, escalators, air compressors, and medical imaging systems, supporting the development of social infrastructure and industrial productivity through advanced engineering and manufacturing technologies. FY2024 results. Performance overview. In fiscal year 2024, Hitachi saw strong growth across all major sectors, with higher revenues and profits driven by transmission upgrades, renewable energy projects, and IT modernization demand. Adjusted EBITDA margin and core free cash flow reached record highs. EBITDA stands for earnings before interest, taxes, and amortization, showing operating performance before interest, tax, and amortization. Hitachi mostly achieved its 2024 midterm management plan targets, exceeding goals for revenue growth, EPS growth, free cash flow, and ROIC, although the adjusted EBITDA margin was slightly below target. ROIC stands for return on invested capital, and it measures how efficiently a company uses its invested capital to generate profits. The results for fiscal year 2024 were overall good. FY2025 outlooks. For fiscal year 2025, Hitachi expects higher revenues and profits, despite growing global economic uncertainty caused by the U.S. reciprocal tariffs policy. Hitachi anticipates that digital transformation and green transformation will continue to drive demand in the medium to long term. Even after factoring in the direct risks from U.S. tariffs and planned strategic investments, revenues are forecasted to rise by 3% to 10,100 billion yen. Adjusted EBITDA is projected to be 1,110 billion yen. Net income is forecasted to increase to 710 billion yen. Core free cash flow is expected to decrease to 640 billion yen. Regarding shareholder returns, Hitachi plans to expand total returns to approximately 500 billion yen in fiscal year 2025. This reflects its strengthened cash flow generation capability, improved financial position, and the planned sale of its air conditioning joint venture. Hitachi plans to repurchase 300 billion yen of its shares in fiscal year 2025, which is a 50% increase from fiscal year 2024. The fiscal year 2024 year-end dividend per share is set at 22 yen, a 10% increase from the previous year, and the fiscal year 2025 interim dividend is forecasted at 23 yen, also a 10% increase from the previous year, 10% increase from the previous interim dividend. For fiscal year 2025, revenue and profits are expected to increase, and dividends are also planned to be raised, so the outlook is positive. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 3,977 yen as of July 7th, and the US dollar stock price is $27.14 as of July 7th. The US dollar ADR has been experiencing volatile price movements, partly due to the stock split. The current PBR is 3.11 and the PER is 25.6, with a dividend yield of 1.08% calculated based on the previous dividend amount. Compared to the past few years, the PBR, PER, and dividend yield suggest that the current stock price is relatively high. Conclusion. Hitachi's fiscal year 2024 results were strong, with higher revenues and profits across all major segments, driven by digital transformation demand and global infrastructure investments. Its restructuring since the Lehman shock has transformed it into a stable, growth-oriented company focused on B2B and social infrastructure businesses. For fiscal year 2025, Hitachi forecasts further increases in revenue and profit, along with higher dividends, indicating a positive outlook.